Hi, this is Ken, and let me begin with a direct conclusion because the past few weeks make one thing unmistakably clear. Tesla is no longer preparing for autonomy, it has already stepped into the execution phase. The latest FSD upgrade, the jump in reliability rankings, and the arrival of Europe's lowest priced Model 3 all point toward one unified direction. Tesla is accelerating into the Robotaxi era faster than most of Wall Street realizes. Why does this matter for you? Because if these signals are real, then the entire business model behind Tesla changes. It shifts from selling cars to operating a global mobility network powered by AI. And understanding this shift early can dramatically change how you view TSLA's long-term value. Today, I'll connect these seemingly unrelated updates and show how they form a single strategic story that has major implications for investors. Let's start by grounding ourselves in the key facts. FSD version 14.2.1 introduced something that raised a lot of eyebrows. The system can now allow limited texting while driving, but only when the AI determines the situation is safe, such as during congestion or at a standstill. At the same time, snow driving tests have shown huge improvements in slippery and low visibility conditions. European reports suggest camera upgrades could be coming, hinting at synchronized hardware and software evolution. And consumer reports, after years of criticizing Tesla, has suddenly moved the brand significantly higher in reliability rankings. Finally, Europe just received the most affordable Model 3 ever offered, entering the mass market price bands that Tesla has historically avoided. On the surface, this looks like a random list of events, but once you examine the underlying patterns, a much bigger picture emerges. Let's start with FSD. The limited texting feature isn't about convenience. It's proof that the AI is beginning to understand driver intent in context. This is a major shift. Traditional systems focus primarily on lane keeping, obstacle detection, and speed control. But intent recognition, knowing when a driver is disengaging and why, requires a deeper understanding of human behavior and the surrounding environment. The snow driving data reinforces this. Extreme environments have always been the hardest scenarios for both humans and AI. Snow, rain, nighttime, glare, complex intersections. These are the environments regulators worry about most. And Tesla is now demonstrating reliable behavior in exactly these conditions. You can think of this as the final frontier of autonomy. Once the system becomes consistently reliable in edge cases, the path toward wide area deployment becomes much clearer. Now, layer on top of that the potential camera upgrades in Europe. Tesla has historically avoided region-specific hardware unless absolutely necessary. So the fact that we're hearing this now suggests the company is preparing for something bigger, something requiring higher fidelity data inputs and more robust perception. And if we look ahead to the AI5 chip expected in the next hardware generation, it becomes obvious that Tesla is aligning its hardware stack for a high-volume autonomous fleet. But the shift becomes even clearer when we bring in the reliability news. For years, Tesla's reliability was criticized by consumer reports. Many investors simply assumed Tesla would always have lower than average scores, but the latest assessment shows a significant upgrade driven mainly by improvements in Model 3 and Model Y. This timing is not accidental. If Tesla wants to launch a robotaxi network, reliability is not a nice to have, it is central to the unit economics. A fleet vehicle must maximize uptime. A breakdown isn't just an inconvenience, it costs real revenue. So here is the unexpected insight that ties everything together. Tesla's aggressive price cuts in Europe are not merely a response to slowing EV demand or rising competition from BYD. More importantly, Tesla appears to be prioritizing fleet size over short-term margins. The more cars on the road, the more data the AI receives. The more data, the faster the system improves. And the faster it improves, the sooner regulators approve broader autonomy. Tesla is using price as a strategic lever to accelerate AI learning curves. Viewed through this lens, the low-cost Model 3 is not a sales tactic, it's infrastructure. It expands the real-world sensor network that trains FSD. It increases Tesla's future Robotaxi supply, and it builds a global base of vehicles that can eventually be activated through software. This brings us to the strategic context. FSD improvements, hardware upgrades, reliability jumps, and price aggression are not separate stories. They are all aligned toward one outcome, creating the conditions necessary for a scalable robotaxi network. When you look at Tesla this way, as an emerging mobility platform, not as an automaker, the significance of these recent moves becomes much more obvious. For investors, the key question is no longer when will FSD be solved, but rather, how fast can Tesla scale autonomy once it is good enough? If Tesla transitions even a small fraction of its fleet into revenue-generating autonomous vehicles, the earning structure shifts dramatically. Instead of vehicle gross margins, the story becomes recurring mobility revenue, something with software-like economics, and that has much higher valuation multiples than the automotive sector. Looking ahead, I expect Tesla to move through 3 phases. First, expand global fleet volume with affordable models. Second, roll out progressively more capable hardware such as AI-5, enabling higher reliability and faster on-device inference. And third, activate regional robotaxi networks beginning mid to late 2020s, likely city by city, where regulatory progress is fastest. If this unfolds, Tesla evolves from a cyclical manufacturing business into a high-margin service platform. So, here is my long-term takeaway. Investors who interpret recent price cuts as weakness may be misreading the situation entirely. Tesla appears to be positioning itself for the largest business model transition in its history, not from gas to electric, but from selling cars to selling autonomy. The next 2 to 3 years will determine how quickly this transition happens and how large Tesla's lead becomes. Thank you for watching. If you found this analysis helpful and want to stay ahead of the deeper strategic shifts behind Tesla's daily news, consider subscribing. I share these insights every day to help long-term investors understand not just what Tesla is doing, but why it matters. I appreciate you spending your time with me today, and let's continue exploring the future that Tesla is building. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.